So if you look at it holistically, it's been a pretty good quarter. Some of the highlights are our services business, which is 88% of our revenue, grew 5.2% sequentially and 13.1% year on year. So this is a very strong growth, and all of this growth is organic from a sequential perspective. This is probably in the top quartile of growth performance across the industry on the services business. There are, of course, we had a headwind on the product business where some of the deals that had to close slipped from September quarter to October, November, December quarter. And that's the nature of product business. A lot of transactions get completed towards the end of the quarter, and some things potentially can slip. But our fundamental hypothesis, book of business on products, continues to be pretty strong. The second big highlight was our bookings, which was at $2.25 billion, which is a 36% growth year on year compared to the same quarter last year, which had 14 large deals. Our client additions have been very impressive. For example, our $50 million clients have increased from 29 to 41 from a year-on-year perspective. And in fact, all client categories have increased in the last quarter. And the fourth important highlight is our net additions has been the highest ever, 11,135 people we onboarded. And of course, the icing on the cake is the payout policy, where we said over the next 5 years, we're going to pay at least 75% of our net income to our shareholders, which is again a much more clearer and firmer payout policy, which we have formally announced. So a lot of good things. Product business was a blip, but that's just a short-term thing. If you look at this business, which is large part of it is what we had acquired from IBM. Now, there is a lots of puts and takes when you do a big divestiture, right? There is some one-time revenue, there is some settlements and things like that. So I think if you do this comparisons, you will see it's kind of declining for the last 2-3 quarters. But for the full year, we have already said it was low single digit, but we are saying it's at least flat to 1% growth. And there are many products which are very strong growth products in this portfolio. So we remain confident. I mean, if you move into the next year and things like that, the overall, we are optimistic about the business trajectory here. I think this trend is what we would expect in a market which is very buoyant, where a lot of new investments are happening in digital initiatives. You don't really see a very large transaction that you would see in a little more stressed kind of economic situations. But there'll be a lot of action in digital initiatives, and in mid-size deals is where a lot of action is. As I see it, it's quite intense now. But I think the long-term value proposition that we offer to employees, it's not about one-time salary increase or anything, but we are focused on building long-term careers for the fresh talent who is joining us. And whether we are investments in training, exposure, and the capabilities that we build in our teams, I think that creates the real foundation of long-term growth. We are always competing with ourselves, not competing with others. We always want to do as best as possible from our perspective. And right now, I think the market demand is very good. So we are very focused on the organic growth. There may be some small tuck-in acquisitions. So that's what we are doing. I can't comment on what others are doing.